So that's it. We have reached the final part of this course, which is the method. I will go over the rules and the strategy with you and show you examples in the graphs. But first of all, I will review the rules list with you before we start. Write them down. These are the rules that we will work with, only with them. Let's start. The first thing that we do is check our market structure. Is it bullish or bearish? The second thing that we are looking for is to see an impulse candle that breaks the structure. The next thing we are looking for is the liquidity taken. This tells us the institutions are going in the right direction. The next thing we need to see is an imbalance created. We will see a gap that the institutions created and they will need to fill it. The next thing is pretty obvious. We need to mark our POI, which means that this is our demand or supply. And the last thing we need to find is the liquidity created while we were analyzing the graphs. I know this is something you probably heard many times before, but I'm going to say it anyway. You don't enter a trade even if one of them doesn't happen. Basically, the order does not have to be according to what is written here. Only the first two things. It is to identify the trend first. Reading the graph is the most important thing because it's the basis of everything. Over time, you will know how to read and analyze the graph properly. Just work on it and practice as much as possible, and you will be able to recognize it even in your sleep. The second thing is to identify the strong impulse break, and from there it really doesn't matter so much the order, but start by working according to the list I wrote down for you here. Over time, everyone develops their method and order, everyone and what works for them. The main thing is that you work in coordination with the rules I wrote for you. So I wanted to go over the strategy with you. We will start slowly. I want you to understand everything. I will write down the rules for you here on the side so they will be convenient for you to see. So we have market structure, impulse, liquidity taken, imbalance, POI, and liquidity. Blue is my favorite color, as you must have already noticed. It's better. This purple shade is also very beautiful. I'll make it bigger so it will be more comfortable. Okay, now we can start. So first thing, we identified our trend. As you can see, we are in a bullish trend. I will write it down. And I'll put it here on the side. And now we move on to the next thing, impulse. Well, it's very clear that this is our impulse candle. I will mark it with a circle that you will see. I will write it down. It caused the structure to break, so I will mark it in this way. I already have it in here, break impulse, and now the next thing is liquidity taken. You can see that they took all the liquidity from here and just went up very quickly and caused the structure to break. I told you that everything connects to everything. Once you understand the concept of trading, everything will be clearer. The next thing is the imbalance. We will mark it like this. We know that the chances are that the institution will return to fill in this gap that created here. And after that, of course, mark our POI, which is the demand. What we are left with is the liquidity. Did you manage to identify our liquidity that's created here? We will mark it like this. Of course, the liquidity is everywhere in trading, but I really like these big wicks. They are especially worth liquidity. This is the mark of liquidity. You must have seen him quite a bit. By the way, there is a plenty of liquidity here as well, which I'm sure the institution will be happy to take. During the analysis, you will find yourself talking quite a bit and raising kind of speculations and thoughts, and that's fine. It's part of the analysis. So this is what I wanted to show you, just the markings and the first explanations of the rules and everything. But you know what? Let's check if maybe we have also a good example here. We are moving to a lower time frame in order to get another confirmation that the buyers are indeed in control and that we can enter with them into a buy order. Let's see what's going on here, because for now I only see a lot of wicks and I don't see an impulse candle. So we are waiting for a candle to break the structure for us. There is supposedly a small break here, but the candle is not in impulse and you can see that there is not a lot of power here. So this is kind of a fake break. Of course, all these wicks were taken. These are a lot of orders here. We need to see such a candle only to the other side. First of all, we mark our liquidity taken. Now we are actually waiting to see a structure breaks. So, okay, this is not a huge candle like earlier, but you definitely can see the massive rise plus a break here. That's enough for me. This shows a great power to the buyers. We will mark it like this. We will mark our imbalance here, and of course this hints us that this is our Q demand. I will mark it. By the way, do you see this little dodgy candle? Don't let him fool you. This little guy has a lot of power. I will mark it as our demand, and I place my trade from the half of this, and my stop loss is very small, so I will put it at the end of these candles. Let's just see what I marked everything. Liquidity I didn't mark. We have here a perfect liquidity trend line. Let's see if I'm really on track or if I made myself look really bad in this video. Let's move to a bigger time frame and speed things up a little bit. Well, here we have all the liquidity that we marked earlier. I will stretch my take profit up to this point. Oh, do you see this candle? I explained to you earlier how strong it is. I will stretch my profit up to this candle. Let's hope I was right and I don't throw this whole video into the trash. Okay, that was great. Great trade. That's it for now, so I hope you all enjoyed it and I see you in the next video. Well, today we start making progress in the material. I'm going to show you a very interesting trade from yesterday. Let's say that every trader will be very happy to receive such a trade. Unfortunately, I wasn't at home, so I wasn't on chart yesterday. So anyway, I saw it after that. It's okay, it also happens sometimes. Great trades that are missed. Every day it's a new opportunity, so it's part of the game. First of all, we see that we are in a bearish trend. We need to see where the break will be. So as you can see, it breaks from above, and since we are in a bearish trend, it caused a change of character. These candles are very clear. We can see that the buyers are in control. This is the breaking impulse. So we have the market structure and the impulse, and now we mark our liquidity taken. This is our third rule. Now something very interesting happened. Do you see that there is two demands here? So of course you also have to use your logic and read the graphs and understand that also change sometimes while moving. The trade is very dynamic. This is something that I really like in trading. So we have two demands here, but the correct demand we will choose is the lower one because we know that the doji candle has a lot of power. And since there is a very clear trend line of liquidity here. And so we will mark this POI as a demand. And we also have an imbalance here, which is another clue for us. We marked all the rules. We see now that they really exist, and we move on. Remember I told you the liquidity is also created while during the analysis? This is the example for that. After they reach the demand and continues to go up, they will also take all the liquidity here. Here there were a lot of traders who entered early and they were taking out. This is a clear candle of liquidity. Do you see how much liquidity they collect on the way to the POI? They took it from here and also from here. And this is also liquidity. This is also indicates that we are in the right direction. They took it too. Let's see if it's enough for them. Yes. They are now reaching the demand. This means that from here they will start a bullish trend. Just before we place a buy order, we go down to a lower time frame and wait for a confirmation there as well. So here too, we work exactly according to the written rule. Identify the market structure. Now we have to wait for this structure to break. Now it is very interesting what is happening here. Do you see the worry between the sellers and the buyers? Pay attention to what is happening here. It looks like an accumulations that created over and over again, and it's very hard to see it at first. But when you analyze the graph repeatedly, you read it just like a book. You can see here the war between the institutions, and here we have a kind of small structures that have been broken over and over. Another clue that shows us that the buyers are in control is the liquidity that is happening here again and again. As soon as they took the liquidity and broke the structure, it shows us that they want to continue from this area. Therefore, the previous structure is no longer relevant, and the doji candle is another sign of correct demand. This is our imbalance. Do you see this liquidity taken? As soon as it is followed by the new liquidity taken, it is no longer relevant. The buyers are showing us that they are in control right now, and there is no point for them to go down there because they already taken the liquidity. The break impulse is very clear. You can see this big candle. After that comes another big candle. This definitely shows us they are ready to go on. So we already have all the approvals that we need. I place my order here. I put a stop loss on the bottom line of these candles. I will be able to see the take profit in the larger time frame. I mark the take profit up to the top line of where the structure broke, up to the upper liquidity I marked. Wow, look at this candle. So as you can see, we followed all of our rules, both in a higher time frame and in a lower time frame. The highlights are very important, and I wanted to tell you to pay attention to all the dynamics of the graph. Pretend you are telling yourself a story, just like that. Tell yourself what the institutions are doing, where they are going, and where is the liquidity they will take in the future. These are things that will accompany you a lot during trading. So that's it for now. I'll see you in the next video. I wanted to show you how to calculate how many lots to enter a trade, so let's start. First thing, we mark our rules. We see the impulse candle straight away. We mark the liquidity taken. This is our supply, which we can see by this imbalance. Now we will mark the liquidity that's created here. This is definitely a valid liquidity. It reaches half of the POI. We will go down to a lower time frame to see another confirmation before entering a trade. So right now we see that this structure needs to break down. Now that it continues to go up, we will move this line here. Do you see this pattern? This is very misleading. It looks like a broken structure, but is very tiny. We have to remember that we are in a very small time frame. We are in a minute, so it's not a significant structure that broke. You can see that it takes time. They collect a lot of liquidity. Wow! Do you see how they took all the liquidity from above and below? The wicks are enormous. It isn't easy to read the graphs like this, but we will try. Seeing it that way is a little tricky, so I will mark it like this. Since this is the lowest point right now that needs to be broken, we will mark it like this. Okay, now that this is broken, we can start marking all the other rules. This is our supply. All the liquidity has been taken. The imbalance is right here. Now what we have left is to mark the liquidity. I will mark the liquidity here. You see this trend line? These are a lot of buy and sell orders here. This is a valid liquidity. This is also a valid liquidity. You can see how the institutions collect the liquidity like a snake scrolling up and down. They do whatever they want. Now that it continues to collect liquidity, we will place our order and calculate how many lots to enter a trade. I will put the stop loss a little above the high and the take profit at the lowest point. Now that we have placed the trade and we can see the data, we can calculate how many lots to enter a trade. Our balance is $100,000 and we want to risk 0.5% of it. That means that we will risk $500. This is the first thing we do even before we start placing all the details on the website to calculate. I've written the details we need here. Let's start placing on the sites that calculates how many lots to enter. We enter my FX book and start placing. What pairs are you trading on? Your account size means your balance. And how much are you risking? We said $500. And the stop loss is 4.5. We will click on the calculate here, and he gave us exactly how much we risk and how much lots to enter a trade. Now the calculation we need is like this. We see how much our reward ratio is, 6.4, and we multiply that by how much we risk. That means we do 6.4R times $500 on the calculator. It's $3,200. This is the amount we will earn if we trade and we risk 0.5% of our balance. It's a very straightforward, you guys. So stop loss, reward ratio, and how much you risk. You can see the liquidity taken from here. Let's see if it reaches 3R. Well, yes, I would gone out on this break even. You will come across it quite a bit, but there is nothing to do. It often saves us, so it's a good thing. But on the other hand, when you win big. The profits are very rewarding. You can lose twice in a row, but then in the third time a successful trade comes out, it makes up for the 2 failed trades and even more. The profits here are crazy. We only enter here with 6R. Sometimes it reaches 15 and 20 and even more. The potential here is enormous, and it's fun to have opportunities almost every day. Now think that we risk 1%, we would double the profit. Instead of $3,200, we would make $6,400. By the way, this trade took less than 1 hour. Do you understand what crazy profit you can make from one successful trade? And if we have so many opportunities every day, think how profitable you can be.